Good morning and welcome to the market forecast. It is Wednesday, August the 4th. I'm John Hoagland. Thanks for trusting me with your time. We're going to take a look at these markets in context, always looking for good risk management and maintaining good patience. Hopefully, if you're in the markets already, you've got things going your way. Some decent moves here after the ADP number, which was a bit of a shocker. Looking at the economic numbers and things due out today, 7:15, the ADP employment report came out. They were looking for an additional 695,000 jobs. Only 333,000 jobs were created. So it's a bit of a shocker there. We've got jobless claims tomorrow, and then Friday, the unemployment numbers due out. So lots of information due out regarding employment in the next few days. I'm wondering if this is a foreshadowing of what we're going to see over the next couple of days. 9 o'clock, a pretty non-impactful number. The ISM Service Index due out. 9:30, the EIA petroleum status also. The last thing for today, we do have a talking Fed. Clarita is talking today about Fed policy. So that happens at 9 o'clock this morning. So maybe a one ear or eye on what he talks about. As far as other news is concerned, we've got our equity futures looking to the downside a little bit, kind of opening steady lower after New York has introduced the first vaccine mandate for those wanting to go work out or go out for dinner or to see a show. China shuts down public transportation, tourism, and entertainment venues in an effort to combat COVID there, which seems to be on the rise. Earnings this morning, GM, Kraft Heinz, and Emerson all beating expectations. So we've got good earnings to help with shoring up some of these markets, perhaps. After the close, we have Uber, Booking, Roku, MetLife, and Allstate, just to name a few. It is a long list today. Crude prices have continued lower on fears China and the COVID slowdown will hit demand. API had a point in, let's call it a 900,000 barrel drop in crude stocks announced last night at 330, 430, whatever it was. And the EIA is expecting approximately a 3 million barrel draw today. So that could shore up prices. A little less demand, but a little less supply might shore up prices a little bit for us. We're going to have to wait and see. And as always, make sure you hit that lucky like button. Share, comment, question, feedback, heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. A quick look a few minutes ago at the VIX, the dollar index, and the 10-year yield. VIX is up about 3% this morning, 1860 the last I saw it. The dollar index off slightly, 91.92. The dollar kind of maintaining below 92 at this point. And the 10-year yield up a little bit, 1.137%. As always, got to say good morning to everybody. Nico, first in the room, you win the prize, Nico. Brian, George, best trader community. And yeah, pretty decent move in gold after that ADP number. We're going to take a look at that shortly. James, Raven, Jim, Tanya, Juan, George, Rob T, Cesar, Mario, good morning. Tone, Vince, good morning. Laura, Joseph, this future scalper, good to see you. Murph, good morning. Deanna, we have Trading Research, good morning. Federico, Ryan, Jose, John, Janus, Vikman, Mike Magallanes, the chef is here. Harry Gordon, good morning. Greg H. Norman, good morning. And Jose. Does VIX mean bullish market? VIX means a little bit more fear in the market than we had yesterday, a little bit at the close at least. The 3% move is not a big move. The fact that it's still under 20 is not indicating a huge amount of fear in the marketplace. Usually when the VIX is rising, equities are going lower. It's a fear factor, the VIX. Prophet Eon, good to see you. And Alhaji, good morning. The group coaching is today, Wednesday, my favorite day of the week. There's the link. Plenty of seats available. Come join us, and we'll have a good session. All right. Looking at the markets, Let's gonna make sure I'm prepared here. Hang on one second. Got solid charts. We're in good shape. Lacey is currently saying good morning to everyone. She is a little selfish sometimes. She only likes it when I talk to her. Charles Lucas, Jose. All right. We are ready to go. So we've got the daily in crude up. Let's take a quick look. So the weekly kickoff low Monday was supportive, broke down through it and closed below it yesterday. Now it is resistance. The market is continuing to push lower on, again, perhaps demand issues, lower demand, lower price. Volume has been increasing on this move to the downside. We did lose 3,400 in open interest, which makes this break to the downside feel a little bit hollow, but we do have a little bit of a visual target down below, a naked point of control from back here on the 21st, that it remains unchecked. But the increasing volume on these down days does indicate a partially healthy downside auction. Excuse me, I apologize. I got a little something going on here. So 3 days down. Continuation is not impossible. You got to see what happens with the EIA. Again, where they were looking for right around a 3 million barrel draw in crude, which could begin to support prices, although it does seem price seems to go the opposite direction whenever the EIA comes out. Good morning, JD. Good to see you, sir. So what are we looking at here? Well, the market has found its resistance at previous support, now resistance, back to it to the tick yesterday, almost to the tick to it this morning. Weekly kickoff low. Overnight settlement is here, 70.56. We've got some overnight shorts in this market, but the market opening not with a gap, but at least initially rejecting yesterday's price. If this continues to the downside, we know we've got a couple of visual areas to look at here. This 67 even is a naked volume point of control. Just below that is on the same day a naked TPO point of control. If this market is going to continue to the downside, an obvious visual target would be all the way back down to 67, even this area here. That's a pretty substantial move. We're talking about a 200 tick move here. So I'm going to be cautious not to fight this move to the downside without some sort of structure, and eager to try and probably find a way into it. If you have a hard time getting into a directional move, it means that the move is strong. Market's almost like it's trying to keep you out. But again, we don't know what's going to happen. We're a little early here in the session. We do have EIA, so we may kind of settle in to a range here until the EIA comes out. I wish I could tell you exactly what was going to go on. Unfortunately, nobody can do that. We've rejected yesterday's range. We've got visual targets below. We were aware that there is some questions as to how much demand is going to be out there. You do the rest. There's fish in the crude oil. Probably not very happy, but if they're in crude oil, but all right, the S&Ps, 8 days now in balance. We have an inside extended trading hour session here. Volume maintaining. Open interest is beginning to rise slightly, nothing tremendous. Balance rules apply until proven wrong. We've got the volley kind of going back and forth. Our tennis player is right in the middle of the court now. If the next volley is to the downside, he's quick to get to it. If the next volley is to the upside, he's quick to get to it. But last week's range, these pink lines up here and down here, have been basically enveloping trade this whole week. So if that's going to continue, these are going to be important areas to look for fish. In the middle, I'm not all that interested in doing too much unless something changes or I find a decent opportunity in the daytime frame profiles. So balance rules apply. We're fading at the extremes back towards the center. Fading means selling above, up near last week's high, and this week's high, buying down near this week's low and last week's low until proven wrong. We're always talking about risk management. These are good ways to manage risk. We get to these levels where we should be holding them. If we get too far through them, then something may be changing. Acceptance outside of this range means we're going to go with it, whether it's to the upside or to the downside. If we accept outside last week's and this week's weekly range, acceptance is, of course, subjective. It's volume, time, momentum, and participation. If we see this market leaving this area, we're going to try and go with it. Again, the fish are at the extremes here. Take a look at the 30. 44.15 even is the settlement price. It's also our overnight high. We have all of this as, is presenting as value, but this kind of bodes more for repair than anything else. We've got our point of control up here, which is the highest single price with the highest volume single price. We've checked it before the open. We've got a couple of high volume nodes that kind of bear rechecking. Okay, we had a double distribution trend day, second double distribution trend day in a row. Double distribution of time and volume, distribution of time and volume, distribution of time and volume, and then a new distribution of time and volume. When we open or enter in between those areas of balance, we're kind of joined together by the imbalance, we have a tendency to trade to both. If that's the case, then we're going to be looking for a move back down to value low or this low volume or high volume node down here to kind of repair the things that happened yesterday. We did that yesterday for the day before. We traded to both high volume nodes. We got a little bit, aggressive to the downside here, but guess to where? Our extreme of the area of balance, which happens to be last week and this week's low. So we're kind of in an area of potential repair here. I'm going to try and stay patient in the S&Ps today. Don't forget there's some considerable headline risk with what's going on with the infrastructure bill and what might not come out of that. Nasdaq is in a 7-day area of balance. It's a little bit looser. Last week's high and low we haven't reached this year or this year. Volume's been okay. Open interest has been mostly losses. So volume's been maintaining, but we don't see a lot of energy coming into this market in the form of new positions. More like people leaving positions. There's still plenty of space to enter the extremes or the range from last week. We're volleying. We're just not getting very close to the sidelines. Take a look at the 30. So here's last week's low and high, weekly kickoff low, weekly kickoff high is considerably higher. 7 days in range and in value. What we're looking for is we're looking for opportunities at references established by the day time frame that we've been kind of stuck in here. Do we have any overnight inventory? Probably a little bit less than the S&Ps. This is not a true double distribution trend day. There was not a single line of TPOs here. We balanced here. We came up here and balanced, kind of bordering the the area that we opened the market. So there's no real double distribution, but as far as volume profile is concerned, we've got a high volume node and a high volume node and a low volume node. If we start spending some time here, it may just end up being another repair type of day where the market, where price is going to check this comfy level here and this comfy level down here. So kind of looking at these equities as a potential repair day. We're going to go back and we're going to fill in some of the holes that we've left over the last couple of days. All right. I'm going to try and stay patient as always. Gold. We got a nice pop off that ADP number in gold here, didn't we? A little bit of fear factor coming into the markets in VIX and in the gold. Volume was pretty low yesterday. Look at the volume today so far. We're almost even what we did all day yesterday, all session, entire session. Open interest is higher yesterday. We added 1,300, but overall it's been a little bit lower. Short time frame controlled. This weekly high is now being tested. Weekly kickoff high is also being tested. 1840 is weekly kickoff high. Our high so far is pretty dang close to that. We just peaked out just above it by about 5 ticks. 35, 1840. This is not in the right spot. There we go. So last week's high, it definitely a targeted level. The weekly kickoff high above that. I knew something wasn't right there. Take a look at the 30-minute here. Seeing some pretty decent volume. Potential breakout is certainly part of the possible probability here. We've traded straight through this naked point of control here, right to weekly kickoff high, or almost. They're still in the wrong spot there. 1840. Yep, that's correct. So the market one time framing higher. I'm going to suggest don't try and fight this without some sort of structure, without some sort of longer time frame level with which to lean on. Weekly kickoff high might be that level for us. We're getting pretty close to the extreme of the area of balance we've been in. This is going to be an interesting opportunity. I believe that there is fish somewhere between last week's high and our weekly kickoff high up here. We've already seen some decent fish getting caught here on the way up. If you were able to take part in that, wonderful. Don't try and fight it. We're one time framing higher. We do have some levels above to seek out visually and see if there's opportunity and see if there's some fish up there. Overnight longs, of course, naked point of control, already checked. Then the weekly kickoff high and last week's high, the only thing left for us to look at before a really true breakout to the upside, if that is going to be the case. We got lots of space above here if we can accept above weekly kickoff high. And okay, the 6E, the euro, we started putting in a bull flag here, and it looks like we're breaking out the top of it. Now, I've got that same trend line on the 30-minute chart. There might be opportunity at this level. Volume has been pretty low while we've been creating this bull flag. That's a good sign. Open interest has been a little bit helpful. We added 2,200 yesterday on low volume, money coming into the market, difficult to know the direction, not really much help there. Go with an accepted auction above this trend line. So if we are seeing volume, time, momentum, and participation above this trend line, this is a go with type of situation. The only thing standing in our way is last week's high before reaching the weekly kickoff high here, which is 119.81, and it happens to be in the right spot here today for us. Take a look at the 30-minute chart. So this is the upper channel of that bear bull flag that we were seeing on the daily chart, and we are holding above it. We have driven above it. We seem to be holding above it. The more time we spend up here, the more participants come up here. We're looking for new business up here. We're looking for new buyers to come into this marketplace. We'd like to see a pretty decent move to the upside and be able to catch that move and have it witnessed by tomorrow by an increase in open interest, which would have us putting another perhaps check up of this previous naked point of control, and then eventually perhaps our weekly kickoff high, which is not correctly placed on this chart here, 1981. Basically this point of control right here. So there's fish here in the euro. Go get them. And the 10-year. Open interest increasing. Good for the upside. We're seeing the market continue to move to the upside. The auction volume has not been all that great, but with the increasing open interest, I'm viewing this as a relatively healthy upside auction. We can see we've got higher lows, we've got higher highs. The market is upside structure. It is intact. We added 15,000 open interest yesterday on an overlapping to higher day, lower volume, but we did add some more momentum or money into the upside yesterday, and it seems to be continuing to get paid this morning. It seems like a lot of our opportunities have happened before the forecast here, and yet another perhaps reason we should start this a little bit earlier, but settlement is down here 135 even, the exact same settlement as the previous day. The one thing that's notable here is our day session low and day session high are both higher, indicating that the market is still continuing to one time frame higher. Don't want to fight this move, but I think we may be starting to see a little bit of falling off of momentum to the upside here. And we do have some new longs to this market. If they're weak hands longs and they don't continue to see what they're looking for, we could see this market come back into yesterday's range. There was no real gap. Yeah, I guess there is a gap. Perhaps maybe a gap here. So if we can come back and fill the gap, that could give us opportunity to look for opportunities at cheaper levels. Again, with the whole moving averages in the situation they are, this would be a preemptive short, but it's just an indication or a hint, perhaps, that the upside momentum so far is beginning to fall off a little bit. So 135.20 is weekly kickoff high. Not that far away, but I'm sure there's probably some fish up there if we can manage to get the price up to that level. All right. So we've got our challenges set up for us today. Market's already kind of moving, and that's when you're a day time frame trader. I'm usually not going to be in the market till the open. And that's one of the things that we have to deal with is sometimes these markets move before the open, and we have to find our way in. So good luck today. Charles Lucas struggling to break settlement all morning. Good morning. S&P surprised me yesterday. Wonder if it has any energy today. The equities. There isn't anything that they pretty much can do that can surprise me. They're so resilient until they're not, and they just keeping on, just keeping on. John, ADP results were disappointing today. If job reports don't do as well on Friday, will this be good for the markets? As it should keep the Fed away from getting involved. It's that balancing act, Charles. You've got, two of the factors that everybody is going to be weighing, and we're going to have to wait and see what those numbers are. I'm a little bit nervous for the coming numbers later on this week just because of what happened with the ADP today. So it's going to be an interesting one. Happy trading and prosperity to all. Joseph, yes, absolutely. Before correction. Yeah, well, everybody's waiting for that correction to happen, and when everybody's looking for it, it probably isn't going to happen until everybody gives up on it, and then we're going to get the correction. All right, Norman, you're welcome. Almin, Assad, good morning. Good to see you. If you're new to the forecast, welcome. Come to the group coaching session today at 1 p.m. Central Time. We'll be there talking about trading, one of my favorite parts of the week. Get out there and profit. Let's take our deep breath. Humble, grateful, and creative in your trading this morning. I know I'm reminding myself to do that every day. Patience is, of course, a virtue. And get out there and profit today. Have a great trading day. We should see Dan back for the market recap today, I'm thinking. If not, you might be stuck with me again. But that's all right. I enjoy spending time with everybody, and we'll see if Dan's going to be available. I think he probably will be. But we'll see you later on, and trade well. Have a great trading day.